You're welcome to today's video. So previously we talked about understanding market structure. So I think we are done with that now. We have treated market structure. So and that is under how to trade, right? You cannot be a trader without understanding market structure, because market structure is through the market structure that you analyze the market. After analyzing the market, you now begin to think about your entries and your trade execution. Okay, so now when we talked about market structure, there are things we talked about. We talked about uptrend, downtrend. Okay, for instance, this instrument now is volatility 25 is index, and we are in the M30 time frame. Somebody asked me which time frame is best to use in trading. Is it M30, H4, D1, M5, M1, W1, And my answer was that your time frame, okay, the kind of trade you do determines the kind of time frame you use. Okay, I made mention that we have different kind of traders. We have scalpers, we have day traders, we have swing traders, we have position traders. So if you are a scalper, you don't need much of high time frames to make your trading decisions, because your trading doesn't last. You just enter a position maybe in the next 5 minutes or highest 10 minutes. Okay, you have closed the trade, so you don't really need what is happening in bigger time frame. You can just make do with 30 minutes. That is M30. Okay, you can use M30 as your higher time frame, and then you scale into M1 for your trading execution. That is your entries. Okay, so as a scalper, because your trade lasts maybe just 5 minutes of entering that trade, you have closed. So, but the disadvantage in scalping trade is that scalpers tend to risk more. Okay, because for you to be able to have a good income or a good profit in a scalping trade, that means you have to use a very high lot size. You have to risk big, so that within a short period of candle movement, you will make big money as well and just close. So if the trade didn't go in your favor, if it goes against you, that small short period of price movement will make you to lose a big money. Are you getting? So that's a disadvantage that I have with scalping trades. Okay, so as a scalper, you tend to risk too much, and the goal of trading, okay, some people, although all of us come here to make money, we came here to make money, but there are ways you approach the market, you will not make that money. Instead, you will lose the little one you have. Okay, so the best way of approaching the game is to trade small. So this is M30 right now. Let's say from this price movement here, this is uptrend, right? This is uptrend. Then when you come here, from this level here down here is what? Downtrend, according to market structure. And there is a saying in the forex industry that the trend is your friend. The trend is your friend, meaning that you have to trade only when the market is trending. If you come and see that the market is not trending, you don't have a business with that market. You see, this particular market here is trending. Market is trending here, and that is a good opportunity for you to trade. So they say trend is your what? The trend is your friend. Now, this is an uptrend, right? According to market structure, hmm, and the rule, the golden rule in markets, the golden rule, okay, is that for there to be an uptrend, market must break the recent high. Are you getting it now? So as long as market keep breaking the recent high, that means uh, we are in uptrend. Are you getting it now? So let me make an explanation. Let me bring an explanation here, right? Look at this place now. Let me put a line there. So remember we talked about highs and lows, right? So market came to this place now. It could not break it, right? Market could not break this high here. So it came back. So like you see this two lines, this one here and then this one here, this line here and then this line here. We call it period separator. So from here, this line here to this line here is 1 day. Okay, it's just 1 day in the M30 time frame. It's an indicator, it's a price indicator. I put it to know, okay, when a new day. So if I'm analyzing the market as a day trader slash a swing trader, I have to know what happened in the previous day or in the previous week so that I can know what is expected of the present day or present week, right? So here now, market was like it's a consolidation here. And then boom, this candle here broke that resistance. This place is a resistance. So, and what happened is that each time market breaks to the upside, it shows you that yes, it's a confirmation of an uptrend. Because if this level was not able to be broken and market keep coming down, we know that, oh, and then this low here was broken from this movement. It came down and continue coming down and break this place. We know that we are in a downtrend. But since this low was not broken, rather it was this high here that was broken by this price movement, it signifies that we are where we are doing uptrend, right? Now what happens is that anytime market breaks this uptrend and continue going up, going up, going up, there must be what? A retracement. We call it retracement or what? Or pullback. Okay. So now after market has broken the level here, uptrend, we will be waiting for what? A retracement before what? Before continuation again. So each time market breaks a high and continue rallying up, there is something that must be done. Market cannot just keep on going up, 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 up. It must get to somewhere and retrace, right? So after this retracement, there is supposed to be a continuation of the uptrend. Are you seeing it now? So here we have what? The break to the upside, the retest or retracement or pullback, and then the continuation. This thing happens, it's a golden law. It must happen for there to be what? An uptrend. And the reason why we study market structure is so that we understand the behavior of the market, right? Understand the patterns that the market creates each time and take advantage of those patterns. So one of the patterns is what I call break, retest, and continuation. Okay, popularly we call it break and retest, and that is my strategy. Why did I choose to use that strategy? It's because it's a strategy that is constant with market. Market cannot do uptrend without breaking and retesting. and then continuation. Are you getting it now? If you check any time where there is an uptrend, you must see what? A break, retest, and then continuation. So what we trade is here to catch the continuation, right? The continuation. What am I saying? Let me draw something. From here, this is the break. Why is it the break? Because it broke this resistance here, this level here. Remember, our price came to this level, it was not able to break it. It came down again, it touched the level again, it was not able to break it. It came down, it come down again the third time, it was not able to break it. It still came down, and then it used force, and then it broke it, you see, and went to the upside. So this place signifies that yes, now we are now in the what? Uptrend. So because this movement is moving, you will not buy, you will wait and let this movement finish. As it's going up, you'll be monitoring it. Imagine if you're monitoring this trade now from here to here, 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours, 9 hours, 10 hours, 11 hours. Are you seeing it now? So you can monitor trade up to 11 hours without taking any monitor the chart up to 11 hours without making any trade. And that is where the work is in forex market. Your ability to wait for your setup to play out. You don't just say, okay, market has broken here, it will be going up, okay, let me just buy here to follow it and be going up. No, that is not the way to trade. Why is it risky? Because you may just enter here that you want to buy and follow it to the up. And what if the market did not go this far? What if after you just entered, it now begin to retrace back again? Then you will now be in loss and you lose your money. So you leave it, let it go, let it go. This first line here, you must leave it to let it go. You just be monitoring it. Maybe after 1 hour, you come back and check where price is. Okay, the purpose is that you want to let it finish. After it finishes is this first movement, we call it the impulse movement, right? Then now wait, what you're waiting for is the correction, which is the retracement. The retracement, this price movement. So you see what is happening here. The first leg, which is the impulse movement, the first movement that brings the breakout, you will leave it, let it go. When it finishes, it will now bring the second leg, which is called the retracement or retest, right? Then after this retracement that is coming down has finished, that is when you now make your entry for where, for what? For continuation. So break and retest is a continuation strategy. It's a continuation strategy. So for every trend, there must be a break, there must be a retest, and there must be what? A continuation. So what you trade is the continuation. Okay, because in uptrend we are looking for opportunities to buy. Okay, and for us to buy, we have to look for a good place to enter, which is the continuation phase of price. That is what we trade. So break and retest is a continuation. What is a continuation strategy? Like I told you, for there to be an uptrend, there must be what? Break and retest. If you have known this now, you know that anytime there is uptrend, there must be break, retest, and continuation. Then you have an edge in the market. You will be waiting for this thing to form out so that you can trade it. That becomes your trade. So you wait for a breakout first, a retracement, which is retest or pullback. Then in this place is where you now look for a entry to continue the movement of the trend. Are you seeing it now? So from this point here,
in time, which is opening of the day to the closing of this day, you are just going to take only one trade in this particular volatility 25 is, right? You're going to take only one trade. Remember, it's not about how many trades you take. Even if you take only one trade and that one trade give you your daily target, you are okay with the trade for that day. You don't need to overtrade, right? So what happened here, we call it break and retest. Okay, break, retest, and then continuation. Are you getting it now? Break, retest, and continuation. That is our strategy, because this thing, it repeats every day when there is what? An uptrend and a downtrend. Okay, that is our strategy. Our strategy is what again? If you have a book, you should be writing these things in your book, because it's not every time that you'll be looking at your video. So you have your Forex book. Me, I have Forex book. I've been years trading Forex, and I still have Forex book upon Forex book, because every time I have new idea, I will write it down. Okay. So this strategy now, it happens every time in the market, because when you check market, there is always uptrend and downtrend, and then there is consolidation. So but you don't trade during consolidation, because of your strategy does not happen in consolidation. So you wait when there is a breakout first, then you now waiting for a retracement, then you now enter for the continuation. I hope I am making sense. So in these three market level, we have seen the first one, breakout, retest, and then continuation. So how do you enter this continuation? Remember, we are where? We are in M30 time frame. Okay, I analyze my market with M30 and H4 and then D1, but I make my entry in M5. Okay, so the time frames that we use in trading is from up, that we call it top down analysis. Top down analysis, we say from D1 to H4 to M30 and then M5. Every trader have the different time frames they use according to their trading patterns, but I'm telling you what works for me. Okay, and that is what I'm going to teach you, and if you stick to it it will also work for you. Okay, remember, I'm not teaching you to be a scalper. I'm teaching you to be a day trader and a swing trader. Okay, but mostly as a day trader. Why did I say day trader and swing trader? Because what happens in day trading also happens in swing trading, especially when you use the H4 time frame and then the M30 time frame. So you, as time goes on, you're going to see that. So right now, what we are dealing with now is day trading, right? Day trading. So this M30 is a very good time frame to check for your strategy, which is break and what? Retest. Now, how do you make your entries? After break, after price has broken out, okay, you want to wait for the retest. Now, sometimes this retest that just ended here, sometimes it may still come down to this level again before it will continue, right? Sometimes, like I said, it may not just end here. There is no rule that say that it must end in this little retracement. Sometimes it may come down to this level. How will you now know the level that it will come to? Your own is not to react, it's not to act before the price. What we do is that we react, meaning after price has done what it wants to do, we will now follow the direction that price has shown us. Now this level that price came to, let me mark something here. This place is a zone. There's a zone here. There's a zone here. Okay. There's another zone here. Here. Okay, there's a zone there, there's another zone here, meaning that if price if price broke this particular zone, where it will come to again will be this zone. Will be this zone, and then it will from this zone and move to the upside. But the buying pressure was strong enough that it could not let price come down. So price just came to this zone, and then what? It moved back to the upside. Now, how did I know that this place is a zone? This place that I marked. Why did I say it's a zone? Remember, I said that any place that the market came to and begin to return back is automatically a zone. Please make sure you write this thing down. Any place you see that market was coming and then the market begin to turn back again, yeah, and then begin to break up again, you know that this particular place is automatically a zone. Look at this particular place now. Market was down here, it moved up, 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 came to this place and turned back. That turning back automatically made this place to become what? A zone. Now market turn back into this place, and from here again it begin to go up. So this turning back also makes here to become what? A zone on its own. So these are zones, areas that price like to trade from one zone to another zone. You see what I'm telling you now is very, very important. That's why I say you should be writing it down. This particular video is very, very important because this is the video that talks about your strategy. It is strategy you use to enter your trade. After knowing the market structure, trends and all that, uptrend, downtrend, it's now for you to know the right time and the right zones that you'll be waiting for price to come, so that price will come into that zone and give you a confirmation before you trade. Okay, so that is why I say that this place is a zone. Why? Because if you notice price come here with this green candle and begin to give you red candle, meaning it is now retesting back, right? It's turning back. So because it's turning back, that place has become a zone, and from there market came up again and break it. So market broke it with this big candle and move up again, up, 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 and come to this little place. This red candle means what? That price has retraced back again, right? And then it move again. So as price is coming down, it's going to go to those areas where it turned back before and continue before it will now begin to make its own. The trend will continue from there. That's why I said if price did not turn from this area, where it could have turned before would have been here. So sometimes price will just come here, give you one bullish candle, a green candle, and then continue down and come here, and then from here it now begin to continue back to the upside. I hope I'm cleared. Now, how do we enter this market? How do we trade this market? How do we enter here for the continuation? Because now the break has happened, the retracement, which is the retest, has happened. Now it's left for the continuation, which is going to be the price expansion and where we'll take our trade, right? So now in this M30 time frame, okay, depending on the size of your capital, what you wait for here is what we'll call the engulfing candle. Engulfing candle. What is an engulfing candle? When you come here, you see these two candles, the green candle here and then the red candle. The green candle is longer and bigger than the red candle. So the two of them together is called the engulfing candle. So because this one is buying, we call it bullish engulfing candle. Bullish engulfing candle is for buy, right? That is the confirmation you will get when price comes to this zone that you have marked. Now come to the zone, you'll be waiting for price to give you what? The engulfing candle. Once you see this engulfing candle, it's a confirmation. You can now enter at the close of the candle and put your stop loss below, somewhere below the candle, right? And buy. So if you see what happened here, I give you two opportunity to enter. The first engulfing candle happened, so it now went down again, come down, and then the second engulfing candle happened here, which is this big green candle here and the smaller red candle. So why is it an engulfing candle? Because the last one will be the green one is longer than the red one. Okay, so the two of them together is what we call engulfing candle, right? So once price come to your zone, you'll be waiting for what? Your entry confirmation. Your entry confirmation is the engulfing candle. So if you did not see this engulfing candle, it meaning that there's no pressure that is pushing the market up again, because big candles means big pressure in that direction. Okay, when you want to trade and you're not seeing big candles in the direction you want to go, just know that the market is not yet going in your direction. So you wait for all these big candles, and these big candles, so this one we call it engulfing candle, bullish engulfing candle. So had it been all these things did not form here and market came down here, once market enter this zone, you'll be waiting for it to form here before you do what? Before you buy to the upside. So in the M30 time frame, you can enter here in this M30 time frame, or you go into M5 time frame. So that one may confuse you. So let's not go there now. Okay, let's just work only on this M30 time frame. Only on this M30 time frame, so that you grab it well first in this M30 time frame before we now begin to say, okay, we want to look for more entries maybe in the lower time frame to use it to enter. So for now, we are going to just stay in this M30 time frame, right? So we have seen our strategy played out here, which is break, retest. Now it gives us confirmation here by this engulfing candle. Now there are different candlestick patterns. There is what we call the hammer pattern. Okay, there is what we call pin bar. There are different, but out of my experience and all the times and all the years I have spent in this industry, I've seen that the engulfing candle is the best of all of them, because that is what will show you that the buyer is now in charge because of the buying pressure or the selling pressure that this engulfing candle produces when it comes to your zone. Okay. So that is that, right? This is how you enter. I've shown you how to enter now. So after breakout, you wait for what? A retracement. And I'm telling you that the areas the retracement is likely to go to are the zones. Like this place is a zone, this place is a zone. So you mark your zone, you'll be waiting for price to come there. Now it's not that when price just come there you buy. No. After price has come there, you wait for an engulfing candle as a confirmation for your entry. So once the engulfing candle has played out, that is when you now buy. Set your stop loss and your TP. Okay, so those zones are where price are likely to come to before it goes. So now let's say we are done with this particular price movement that took us all the way to this up. And like I told you, as it goes this up, what happened? This place now, this upside is also a high that price came to and turned back. So you begin to look for another entry again. Now, let me now draw something, because that place becomes another zone for you, right? This place becomes another zone. You now draw your box there. Are you getting? You draw your box there. Why did I draw this particular place? My mouse is now. That is where price got to and came down. So that place becomes also a zone. This place is also now a zone, right? So what happened here? Market now came up and broke it. This big candle here broke this line here. Let me put this kind of line here so that to make more sense to you. All right. So you see the new line I put there, because market came there and returned. So because we're an uptrend, it is expected that market will also go back there and break it. Because for the uptrend to continue, this zone must be broken. So now it came again, it give you another break, another retest again, coming down, coming down. Where did it retest to? It retested to this particular zone that was broken out before. Are you seeing it now? So this is break and retest. So in this new place now, let us pack our load from this place. We'll pack this load and bring it to this new one. Right? Okay. Okay. So we'll pack our load, we bring it to this place. Okay, this new this is another load, pack it to the new position. Okay, so you see the same thing that happened here is now happening here. Why? Market came to this level here, right? In this place, bam, he broke it. This is the breaker. This big green candle is one that broke the zone. So he broke it like that. Market got here. What happened? Because in the uptrend, after a breakout, there must be what? A retracement. It is a law. It must happen. It must happen, just that you don't know the right place that it will get to before it will continue. So what you'll be waiting for is for it to come down, retrace. Now this is your zone already. You know your zone now. So market has come to that zone. So what has happened here? The break has happened, retest has happened. It's now wait for continuation to happen. So this continuation is your trade. Right? It's your trade. How do you enter in this continuation? When the market has retraced back into your zone, you'll now be waiting for what? A confirmation, which is what? An engulfing candle. Look at what happened here. This green candle. Now, if you look, the first candle here, this first green candle in this line is very small. It's not big as this red one. So it's not an engulfing candle. After this green candle, another small red candle comes out before this big green candle that is bigger than this small red candle. So these two candles together are what we call what? The engulfing candle. This one is a bullish engulfing candle. So once you see this candle, as the candle closes, you enter your trade and put your stop loss below it. Are you getting it now? So you anticipate, you buy this movement, this new price movement that is coming up is your profit. Are you getting? So we'll call it break, retest, and continuation. That is our strategy. Okay? Break, retest, and continuation. For a short form, we'll just call it break and retest. Okay? But break and retest is a continuation strategy. It's a trend continuation strategy. Okay? So trend what? Continuation strategy. Right? So I've shown you two examples now in the uptrend. So let's look for what to, as in downtrend, right? Let's look for downtrend and do example two. I just clean all the things that I drew here. Okay, you see the same thing happens over and over here. Break, retest, continuation. This continuation will also create another break. Then retest again, continuation. Right? So that is how you go. Although sometimes, market can be messy sometimes. It may not give you a clean trend like this, but you just have to have the overall view and idea of how this thing happens. So if you see all this break and retest, nice opportunity. Here in this zone now, this is a zone, right? It's a high. Okay, remember price makes what? Higher high, higher lows, higher high, higher lows, higher high, higher lows in uptrend. So market will always trade to the areas where there are highs and lows, because those highs and lows are our potential zones that we are waiting for price to come so that we'll take our trade. So look at what happened here. Here again, price came up, it broke this level here. After it broke it, it come down here. And what did it do? It give you engulfing candle again. Are you seeing it now? The big green candle and the small candle, that is what your confirmation to enter. Once you see it, enter your trade and put your stop loss and set your profit. So like here now, this is what a continuation phase. This continuation phase also broke this recent high again. So market went up again and retraced back. Now it did not, you see what happened in this place now? It did not come to this zone again. You seeing it now? This particular zone, market was not patient to come there again. From here, it just zoom up again. Are you seeing how market moves? So sometimes you may mark this area as your zone and market may not come there. But what will let you know that market is ready to continue is that you will see an engulfing candle. Once you see an engulfing candle, it's a sign. Okay. Another thing that I use, like this CCI, this indicator that is below here, CCI, you can also use it to time your entry. Whenever price in uptrend, price come down to the lowest line here, you know that market is now preparing to continue. Check here too. When price came down to this last line, that was when market moved. Check here too. But this thing works with trend. If it's in uptrend, you'll be waiting for price to come down to the last line, right? Once price have come to the last line here, then you'll be waiting for a confirmation by the in the market, that is the bullish engulfing candle. So that's what happens in uptrend. We want to go to a downtrend and see what happened. Okay, this particular place is a downtrend. So from here now, right, to this down place is a downtrend. So we want to check our strategy too in this downtrend. So our trend, remember, our strategy is a break, retest, and continuation, or break and retest. As simple as that. It's a continuation strategy. Okay, so here we want to see what happened in this market. Okay, what happened? Let's mark some things here. I'm marking zones, right? You as a trader, you must learn how to mark what? To mark your zones. That is the first thing you will do as a trader when you want to analyze your market. Analyze your market. So now, remember I said I am marking zones. I take my cursor. Let me explain this market now. So after price came up, it broke this zone here. To this up, it came down here, it moved up again. It broke this recent high. Okay, because I said any place market got to and retrace back, that place has become a zone for you. Okay, those are the places market will react in the future. So market came to this particular zone, it broke it to the upside. After breaking it, it began to come down. Now this particular zone supposed to push market to the upside again, but it failed. This zone failed to push market, so market now came down again and come to this particular zone down here, because market came here and returned back. So market came down to this zone, but this particular zone here, market has broken it to the downside, right? Market has broken it to the downside into this particular zone. So what happened now? Market now retraced back into this zone here that failed to push market up. This zone that it broke before, market now retested it and then come down. So if you notice here now, the zone here is not that clear. It's not clear. So you may not take any movement based on this one. Rather, you wait for this one here, because in this place it is very clear that this place was broken by this line. This particular zone that is in this place was broken by this price movement that came down. So you can now say that this place is what? A break, and then the market retested the zone here, and then continuation move downwards. Are you seeing it now? I'm talking about break, retest, and continuation, which is break and retest, right? So how we look at the market is based on the zones that have been broken. So here market came up here, it could not go up again. It came down. It broke this zone into the downside. If you are very, very experienced, you may want to take this trade once it came here and give you engulfing candle. Remember this one too now is an engulfing candle, which is what? An entry sign, a sign for you to enter. When we are talking about buying, this is an engulfing here. A small red candle and a big green candle. This is a bullish engulfing candle, a signal for you to buy. Then when you want to sell, you see a small green candle, just the opposite, a small green candle, and then a big red candle. So the two of them together is what? An engulfing candle. So at the close of this red candle, you can now sell at the close of it. Put your stop loss above it here, and then you target your profit to the downside. Are you seeing it now? So there is always confirmation before you enter. Don't say, oh, I have come to the zone now. Let me just buy or let me sell. No, once you have come to the zone, the next thing you do is to wait for your confirmation. So like I told you, this particular place is a zone. Market broke it, came into the zone again, give you a confirmation, so you sell, right? But like I said, this zone is not really obvious. This one is the one that is very obvious, because as price came down, you can see it clearly that from here, price turned back. So if you want to sell in this market, avoid this place for now, because you are just starting, right? You avoid this one. Trade with zones that you can see clearly. Here you can see this one clearly, that market came here and it turned back. Market came here and it turned back. So these are clear zones, right? So market now came to this zone and broke it down. Since market has broken it down, you now be waiting for what? A retracement into the zone. So now you have come to the zone here, but this red candle is not an engulfing candle, right? This red candle, it did not engulf this green candle. So are you going to enter here after the close of this candle? I will say no, don't do that, right? Wait for what? Engulfing candle. Let engulfing candle form before you trade, right? So what now happen is this first candle did not engulf the green candle. So you leave it and the market keep coming down, coming down, coming down, coming down. You now come here, it give you an engulfing candle here. But this one is not from the zone. So you are not going to enter sell because of this bearish engulfing candle. You leave it for price to come back again. If price did not come back here, you just let the trade go. Okay, if this movement here did not come back again, you just leave it to go. Some markets are like that. It is better you stick and stay to your rules. Okay, stick to your confirmations than entering markets where there is no confirmation. Because why I say you should not enter at the close of this red candle, because after this red candle there is probability that another green candle will come up again and keep going up to this level here. Are you getting? But once you see that engulfing candle like this one that happened here now, okay, it's a good confirmation that price may not have to go up again, but from there begin to come down. Are you getting? Now you see what happened after this level. Price came back, went up again. The red candle was not also an engulfing candle, so you will not enter again. You'll be waiting for that engulfing candle. This next candle come out, the green one, then the next red candle was not engulfing candle. But sometimes the engulfing candle comes in two. Like this first one, right, alone did not engulf. But this second one that came was very big that engulfed it. So the three of them together now, we can now say that these three of them together is an engulfing candle. Are you seeing another extension of engulfing candle, right? But most of the time, the most active is the one that will just, this first red one will just come down and engulf the green one. Okay, that's the number one. But sometimes it may not happen like that. So you wait for the second one to come and engulf it. So after the close of this candle, you now enter your trade here, put your stop loss above here, and your take profits, you target it to the downside. Do you see how we trade break and retest? So here, what happened? Let me bring that drawing that I drew the other time. So here we see what? A break, a retest, continuation. So did you see it now? Right? So this structure here, it break down. It broke this my zone here. This movement, he broke it. He retested the zone, and then from here we got a confirmation to move down for the continuation. So that is our strategy: break, retest, continuation. So you see now all these things that is happening here, you will not trade though. You will not trade, you just be looking at the market. From time to time you come and you check it. From time to time you come and check it. So the one of the best or the major work you will do in forex trading is waiting and not do anything. You just wait. Let your pattern form finish. If your pattern never form finish, oga, you don't get any trade. You get me? Even if it's just only one trade you take in a day, oga, it is enough. It is okay. In forex, there's another saying that says less is more. Less is more. You take lesser trades that has clarity, it gives you an opportunity to have profits and successful trades. But if you begin to force trade when your pattern has not formed, you make mistake and you lose your money. You get it? So you see the thing I drew, you let your zones be clear. This particular zone here was clear enough that from here market went up and from here market went down. And as it came down here, the impulse move, it broke this level here down. So that is why I say it is now what? A break, and it's now retested the level again, right? And then what happened? It gave you a confirmation, right? And now give you continuation. This continuation is your trade. That is where your profit is. So your profit is in the continuation. Your profit is not in the retest. So whenever you open your market, whenever you open your chart, the first thing you will look for is your zones. What zones are we looking at? You now look, okay, which of the zone was broken? If the low was broken, that means we are in downtrend. You will now be waiting for price to go and retest so that you will now trade the continuation. Okay, if the zone here that was broken was what? Uptrend. You broke, that is the high was broken. You wait for a retest for you to do what? And continue to the uptrend. Are you getting it now? So this is what you do. This is how you analyze your market. Break, retest, continuation. Okay, now what happened here again? If you come down here, this place is also what? A zone. Let me extend the zone. Are you seeing the new place I just came to now? Okay, let us pack our load here too, as we pack our load before, right? Okay, let's just leave it like that. So you see what happened. This place was also what? A zone that price, after it came down here, from here it went back. As I told you, any place that price get to and return back becomes a zone. Now market came here too and returned back. This place also became what? A zone, right? Which is also a high and low. So market always make highs and lows. Those highs and lows are your potential places where you will take your entries, because that is where price is likely to come to before what? Before it continues back. Now look at what happened here. This zone here, this black guy here, this black line, it came all the way, it broke this zone, this particular zone that is here. this my box that I drew here. This line came here, it broke it, which is what your continuation movement in price, right? Remember, this continuation is your profit because you took an entry here after your break and your previous break and retest. You took your entry here. As you move, you are in profit to this place now, or to the level that you put your take profit, right? So you come down. This is the break. For you to trade again when the new day open here, because after this line, this big line here you are seeing is the beginning of a new day. When that new day open, you are waiting. You will not just say because price is here you want to buy. No, you wait because there has been what, a break of level here. This level has been broken, so you'll be waiting for this new day candle to retrace up into that zone. You see, after I come to that zone, what happened? It gave you a bearish engulfing candle here, which is the red and the green candle. The red candle was longer than the green candle, so the two of them together are what? Bearish engulfing candle. So at the close of this red candle, you enter your sell, you put your stop loss above it, right? You see, market came, it came into your favor. To your direction. This is how you move. Direction is very, very important in forex trading. So you must know your direction. How do you know your direction? You know your direction through break and the retest. Market will always break the recent high or the recent low. So which one that market break, you know that market is going in that favor, then you in that direction, then you now wait for what? A retracement. After the retracement, you now enter your trade for the continuation, right? So you see what happened here. Market came down here, came here, gave you this engulfing candle. You sell and came. This movement that you sell here, see what happened? It broke another level here. This was because market came to this zone and turned back. Now, what did market do? So we are done now, okay? We are done with this explanation, right? How you got this entry. This entry, we have explained it because what? Market came all the way here. It broke the zone here, down here, which is break, retest, continuation is your own trade, right? So the pattern, the confirmation for you to enter is this engulfing candle, right? So this engulfing candle is now your confirmation. So you enter it for the continuation of the trend into this place. So as you are coming, remember your market has broken this level here. What happened to that level after it was broken? What happened? What happened to it? What happened to that level? See what happened to that level. Market, after breaking it, what happened again? Market came back and it tested the same level again and it began to come down. Are you seeing? So the same thing happened in market over and over and over again. So you just have to wait for this process to form out. Okay? If you no wait, you could go trade anyhow, and if you trade anyhow, your money don't go. So even in demo trading, this is how you be trading it in demo, because the purpose of the demo, like I said, is you use it to practice exactly what you want to be doing in your real account, so that when you master it first in your what now, in your demo account, it will not be new for you to do in your real account, because you will not use your real money to go and be practicing now. You're not going to use your real money where you suffer get use and they do anyhow. So when you come to your demo, don't treat it as nonchalantly, like your money no did there, so you just trade anyhow. That's the mistake people make, and that's why they say demo trading is easy. Why? Because you just do anyhow you like. You don't take it serious. But if you get sense, you go take this demo trading as exactly the way you want to trade with your real one. Your risk management, if your first account where you want fund them with at least, let me say, if you want to fund your account, you fund at least with $20. Because I know say all of us will not get money, right? So you start small, right? So you fund with at least $20 or at most $100. So let's say you are funding with $20 in your first time for your real account. This demo, you'll be trading it as you are trading $20 account. So the risk percentage that you will use in your $20 account, that is what you'll be using here. Okay, now this is the first time of us talking about the strategy. After this strategy, now we begin to talk about our risk management, right? So in that risk management is where we'll now be talking about the percentage of your capital that you're going to risk per trade and the percentage that you're going to get in each time you trade. That is what we call risk to reward ratio. Risk to reward ratio. We'll talk about that, okay? But now, what I want us to concentrate is what? The strategy. Break, retest, and continuation. So these things happen every time. It happened in this place, right? Here we break, we retest, we did continuation into this place. Here again, we break here, this zone here. We broke it, we retest, we did continuation. Here again in this zone, we break it, we retest, we did continuation. But something happened here. Market reach here, you say, I don't think I can continue this downtrend. I want to do uptrend now, right? I want to do uptrend. Why? Because higher time frame here, which is H4, H4 here might have come to a very strong level. Might have come to a very strong level. Let me mark something here. You see this level we are here? Let's go and check what happened before. You see it now? This is a level where price start to move up. So this one is a level that where price begin to move up. When market came to such level in higher time frame, there is a tendency that what it will begin to push back up. Pushing back up may not even also last maybe to this pushing back that is doing may not go up to this previous high here, right? Because we are still in downtrend. So, but what happened here is that the H4, okay, is pushing back, doing retracement. So if there's retracement, like what happened here now, you see, after market pushed back into this zone, it came back, it failed to clear this zone, it began to push back up, and then this particular zone here, the thing now, boom, it broke it. Did you see? After it breaks it, what you begin to think of now is to buy, no more selling, right? Is to buy because your recent high here has been broken. So break, retest, continuation. That is what you'll be thinking now, right? Okay. So let's see what happened in price. You see it now. Market break, retest, come here, continuation. It was not able to break this guy. It come down again to the same zone, right? It pushed up again, right? And then it pushed back to tell you that there's still pressure of this selling, but market was trying to, H4 was trying to push. Okay, but the selling pressure in the H4 was still strong, pushing price down. So you see, this place was a previous low. So market will always want to travel to this previous low. That is why from this high here, market came back. When it come to this zone, this low here, this zone here, it still push price up to the former high. So when price came here, it still push it back again to this high. So you have to be watching out for the highs and the lows, because that is where price will push the market to and then begin to come back again. So from here, market pushed it back into this high. Yeah, right? From there, it now begin to come down. Why is it pushing? Why is market pushing up here and pushing down here? If you go to your H4, which is higher time frame, you will see clearly. Okay, let's go to H4. Let's go to H4. This is H4. Now, you see what is happening in H4. Why the market was pushing the price. There was a zone here. This place is a zone. This place is a zone. In the H4. Are you seeing it now? This place is a zone. Why did I say it's a zone? Here, remember, market went up, came down here. it pushed up, it's supposed to come down and still push up again, because this place is a zone. I told you any place market get to and turn back is a zone, right? So market came there, it's supposed to push up, but this selling pressure was strong. You could not push up, so then it now gave another engulfing candle downwards to break. So market now broke down. So what is happening is now retesting the zone here to continue downwards. So the break and retest here is happening in H4 now. So this is a zone that market broke. This particular place here, as you see my plus sign, this engulfing candle is a zone, right? So market came down to that place. Instead of the engulfing candle to push price back up, it could not. So it created another opposite engulfing candle here, which is a bearish engulfing candle that now pushed price down here by breaking this one. So after this break now, what is happening here is a retest of this H4 zone to continue downwards. That is why if you go to M30, now be this line, oh, that big line what I put for H4 now, now be this big one where they up. So are you getting it now? So price coming here in that higher time frame is H4 resistance zone. That is why price was not able to come past here. So H4 is the one that is turning back here, and M30 does not have any say because higher time frame controls smaller time frame. So it has to move down in respect of H4. So it moved back again inside the same zone. It could not break it. It now came down. Why? Because this zone is H4 zone, stronger than M30 zone. So if you come here now, you see that this one, you say that this is a small zone. It has broken. So because it has broken this high here to the upside, you're expecting that there has to be what? Uptrend want to begin to continue. But why the uptrend did not last? Because the H4 time frame, which is higher time frame, is in a very critical resistance level. So this is what is now pushing price down to continue the downtrend, up and then down. Are you getting it now? So I hope you have learned something today on our strategy, which is break and retest. Take your time and take your notes. Write. Most of the time, you just open your book without opening your phone and begin to check what is happening in what in your book, the things that you have written down. You open your book and begin to revise what is happening, and check your what your charts and see how you can relate, how you can interpret. Talk to yourself. Talk as if you are telling story. For instance, how do you tell story? You just come here. You say, now look at what I'm doing. That's okay. This was a level. Price came up. It broke this level, right? So a break has happened. What are we expecting? A retest. Market retested into this particular zone here. Retested here and push up. When it got to this level, it pushed back a little bit. Market come again. It broke this level and pushed and also break this one. After I break it, it still come back a little bit and come back into the zone, this particular zone again. From there, it gives us what? A bullish engulfing candle. It moved. So this is how you analyze markets. Okay, this is how you analyze. You analyze market based on your strategy. Okay, market analysis is based on what? Strategy. And where did you get your strategy? You get your strategy from what? From market structure. Okay, what did you get in market structure? In market structure, you know that price is doing uptrend, downtrend, consolidation, and all that. So you wait for consolidation. So you wait for trending. The trend is your friend. So when trending is happening, you wait for what? Break, retest, and then you trade the continuation. As simple as that. You only trade the continuation after you have seen a confirmation candle, which is what? An engulfing candle. Either a bullish engulfing candle for uptrend or a bearish engulfing candle for downtrend. I think that is all for now. In the next time, we will talk more.